Hey guys, what's up? How's it going? Merry Christmas and Happy New Year. In today's video, the stock market is finally open, so we're going to do a quick little update on my portfolio, and I'm going to be showing you guys the Canadian stocks I'm going to be buying inside my dividend-based portfolio. So we're going to jump inside Wealthsimple Trade in just a second, but if you guys enjoyed this video, please be sure to give it a big thumbs up, and remember to subscribe to the channel if you guys want to follow alongside with me as I build out this dividend-based portfolio. So let's jump inside the portfolio, and let's see how our stocks have been doing over the past couple days. Alright guys, so we're inside the Wealthsimple Trade portfolio here. We're sitting at $14,714 here. That's the total for the account. And we'll go inside our TFSA where I keep the vast majority of my Canadian dividend-based stocks and some US growth stocks inside the portfolio. Once again guys, just to remind you guys, this is a dividend-based portfolio and the whole goal is to increase that monthly dividend income as well as getting some stock appreciation as time goes on. So here's the portfolio we have. We'll do a quick little recap on how our stocks have been doing over the past little while. So over the past day, the markets are finally open today. You know, they've been closed since, I think it was Christmas Eve. I can't remember which day they closed at, but they've been closed for quite a while. So there hasn't been too much to do. And I know a lot of you guys are waiting for them to open back up so we can start buying stocks again. So the Canadian markets are finally opened. Today, the US market opened yesterday. So throughout the first day, we actually got a nice little rise up in stock price. We're up 1%, which is $100 in the past day. So that was really nice to see opening up today. Over the past week, we're up $135. Over the past month, we're up $208. Over the past 3 months, we're up $859. Then all time on this portfolio, we are up $759 if we just put it in a simpler percentage. Once again, remember, I did combine two portfolios together, so the actual percentages isn't 100% accurate as well as the gains. But that's just a nice, we'll just kind of use that for now. And when we jump in the spreadsheet later on, I'll give you guys an actual amount on how much the portfolio is earning on a monthly basis, as well as how much we're up all time. So we'll jump inside the portfolio really quickly here, and you guys can see the bulk of the portfolio, as most of you guys can see here, is Canadian stocks with a little bit of US growth stocks in the S&P 500. And then I also have a main Canadian-based ETF as the bulk of the portfolio. So one thing I like to do whenever I do these videos is I always want to make sure I'm buying some type of ETF. And the two ETFs I have, as most of you guys know, is VDY or VFE. So we have the S&P 500 index here to get some growth stocks and get some dividend income as time goes on. And we can see here we're up 1.3% in the S&P 500. So that's a nice little gain. We can see here we have 35 shares, so $2,000, $3,000, we're up 1.3%, so that's sweet. And that's the reason why I like US growth stocks. Even inside of TFSA, they keep growing, and that stock appreciation will allow you to make a lot of money in the long run. And then we have VDY here today, which is once again just a really solid Canadian-based high dividend yield index. Has all the banks, all the financial based stocks that Canada is known for, as well as some power and utility companies. So this is the ETF I'm going to buy today as the base. So I'm going to buy about $100 worth of VDY here. Just put this through here really quickly. So that'll be my first buy. And then we're going to buy two other individual stocks inside the portfolio. And the two I'm going to be buying today are some pretty good ones that have done well. So we'll go back inside. And one is, I think, an up-and-coming stock that a lot of people don't really talk about, but has done really, really well for me and over the past little while. And this is Transalta Renewables. And this is a renewable-based company out of Canada. They're sort of new. They've been around for a couple years now. If we go over the past 5 years, we can see there that they've grown 105% over the past 5 years. A lot of that actually coming this year. And you can see they've done quite well. And I think they're going to do quite well because of the fact that they're a renewable energy source, and that is becoming more popular, right? And you can see over the past day, they're up 4%. Over the past week, they're up 13%. Over the past month, they're up 20%. And they've just they've had a solid year this year, up 38%. And I think going in the future, they're going to grow as a company. It's hard to say, they might be kind of going up a little bit too fast right now, so that might kind of level off as time goes on. But I do think long term this company is going to grow. So this is a company that we're currently up 43% inside the portfolio since we first started investing earlier this year. We have 18 shares, $390. So I'm definitely going to buy in a couple shares. I'm not going to go super crazy, but I think I'm going to spend about $50 in R&W, Transalta Renewables. So that's we'll buy 3 shares for $65. And then the last stock we're going to talk about today, before I go inside the portfolio and we talk about the dividend income and I talk about some of that stuff, I'm going to be buying a REIT because, everything's in a lockdown right now. A lot of stocks, some stocks are kind of going up, but a lot of the REITs, we can kind of predict that they're going to probably fall over the next little while. But once lockdown kind of goes away and things start opening again, we can probably predict that they're going to rise in value. Plus, the Canadian REITs are nice because they add to that monthly income. And I forgot to mention that I think Transalta Renewable also has a monthly dividend. So that's a nice thing that's going forward too. But the two REITs I have inside my portfolio right now are RioCan and H&R REIT. And H&R REIT has been hit pretty hard, down 3% over, it looks like, the past day. For the past week, it is down looks like it's up 1%. Maybe that's not 100% accurate. If we go over the past month, it's actually down 6.69%. So that gives us a better indicator of what the company is down. So over the past few months, it's up quite a bit though. But I still think the company's probably going to drop a little bit over the next little while. So I'm going to be slowly buying into these REITs, probably on a regular basis, just to kind of get them, because I do believe when things, eventually go back to normal, they will gain in value. So I'm going to buy about, I think, $100 or so of H&R REIT, and that's going to complete the buys for today. So I hope you guys kind of found value in this. And once again, I'll do a quick little portfolio overview before we kind of finish up this video. Feel free to pause at any point. You guys can see at the individual stocks I hold. I've also done a few videos in the past, for the past couple days, where I talk about my portfolio, so check those out if you guys want. But we have like Algonquin Power and Utilities. We have CNR. I just bought CNR, and I'm going to be slowly adding that inside the portfolio as a long-term growth. We have Enbridge. I don't have too many individual shares of Enbridge because I do hold a good chunk of it in VDY, and it is a bit of a interesting stock. We have Fortis stock, which is nice defensive stock. We have H&R, which talked about. We have Manulife, which is solid financial stocks that have done really well for me, up 10%. We have RioCan, which has been hit pretty hard, but I still think, like, long term, just like H&R REIT, it will grow, and we should see some value if you keep investing on a regular basis. I still think RioCan's a good buy. We have R&W, which I talked about. Severia Corp is starting to see a nice little rise in value, going back up, which is nice. We have Shaw Communications, which has not done good for me, and this is a stock I probably will once again move away from as time goes on. It's actually down negative 7%, which is not very great, but it might kind of rise up as time goes on. We have TELUS Corp, which is up 2.27%. It is a really good company. We have TD, which is my favorite bank company, up 8.6%, and then we have some ETFs at the bottom here, VDY and VFE, and then these ones at the bottom I'm eventually going to get rid of. I'm probably going to get rid of VYM pretty soon here, since I don't want high dividend yield stocks inside my TFSA because they do get taxed. I'd rather have a growth-based fund with a low dividend yield, because that way it gets taxed less and we have more growth, more appreciation inside the TFSA, which makes a lot of sense. So if you have any questions about these stocks or anything like that, or you guys want to add anything, feel free to let me know in the comment section. So we're going to jump over to the spreadsheet, and I'll show you guys the dividend income from the stock portfolio so far. So here we have the spreadsheet where I track the dividend income, and I like to kind of do this on a regular basis just to show you guys how much the portfolio is growing. And the whole base of this portfolio is to just grow a dividend-based portfolio with some good stock appreciation mixed in as well. So you guys can see, once again, this is the dividend income on a monthly basis. This is how much we're contributing into the portfolio on a monthly basis. And this is the total dividends earned, which is $251. So you guys can see it is steadily growing. And then we have our total gains here, which is $1,488. Once again, that's not reflective in the TFSA because we took our personal account and deposited a huge chunk of money this month into the TFSA before the new year ended. So those gains aren't showing up in Wealthsimple trading percentages, but I did track them with my contributions. So in order to figure this out, basically all you guys got to do is take your contributions and then add that all up, and then take the total portfolio and subtract it by your contributions, and you'll have your net gains. So that's another way you can do it as well. But that's the whole point of the portfolio, guys, is to get that monthly income. And we have a lot of dividend stocks paying out in the beginning of January. Pretty much everything pays kind of towards the end of December and the beginning of January. So January should be a pretty good month in the portfolio, and it should be growing really, really nicely. So if you guys have any questions about this video and you guys want to share your thoughts or about any Canadian stocks that you're buying, or you guys want me to take a peek at, please let me know in the comment section. But other than that, guys, I hope you guys enjoyed this video. Please give the video a big thumbs up if you enjoyed it, and take care, and I'll see you guys in the next video.